In chart of the day, I take a look at the world's largest and most popular currency pair, that is the Euro US dollar. I'm going to dig into the technical analysis and see what's going on. Hello, I'm Stephen Ho, trader and founder of the Stop Hunter. So before we can carry on, a risk warning for you to pay close attention to. The content in this video is not investment advice, so please seek the advice, help of financial professionals or financial advisors before investing and trading. And trading and investing involves a high degree of risk and your money is at risk, so be very careful. So with that out the way, let's get on with the analysis. So into the weekly line chart for the Euro USD, and it's interesting to see over the longer term how the price has played out. We've got about 6 years of data here, and if we focus in on 2017, we can see the euro being really strong in the run up to the end of the year, then falling off, weakening for the next 2 years into the early part of 2020, then recovering strength again into the end of that year and the beginning of 21. And then it's been a bit sideways, a bit up and down, and currently just pulling off over the last few months. And if we look at the Fibonacci's there, we got that key 61.8 line around the 1.69, 1.17, and that does have some history going back into 2018 and 17 as areas of noise. Now that double top that we can see forming over 21 and late part of 20, could signify a further fall down in the price, around to that, or even below that 50% line at 1.145 down to the 1.12, where again there's a lot of noise history in that price range. So currently not looking great for the euro against the US dollar. So let's dig into the Heikin Ashi chart to unravel a bit more of the more micro detail. So we've got about a year's worth of price history here on the daily Heikin Ashi, and over that time the trend, that black 200 moving average has been up, but from July time of this year the prices dipped below that and started to trend downwards. Now if we look at the signals, both are bearish, those bottom two lines, the regression and the RSI. Volatility is as it is. FX markets aren't that volatile compared to our stocks and crypto friends. So back onto the price action, our box set up there, we've got a sell signal and a short term price under the moving average. It's looking, pretty, feels pretty bearish. But if we scroll across back to October of last year, we can see some price or support there. So it looks like we're approaching a quite significant area in terms of price, for either a bounce here or a further breakdown lower. Now the Renko chart, I've got a block size of 0.0015, and if we go down to the signals at the bottom, both are currently bearish, and we look onto the price and we've got a breakout down from those two orange lines, which is our bands there, and it's below the short-term moving average. So in the short term, looking a bit bearish. The trend has been down since June, and I've applied two different Fibonacci's on there. One is a longer term one, which if we scroll back, I had to find the highs and lows way back here. We had a nice double bottom in November time of 2020, and the highs around the beginning of 2021. And I've also added on a sort of a trend based Fibonacci on that recent downtrend to give us some further look or analysis to the downside, see where the price could go to next. So like I say, we've got that zone around 1.16 to 1.17. That could be noisy, and it's going to be critical to see where it goes next. If it does break, then we could be seeing the price down to the 1.14s, 1.13s quite quickly. If it stays where it is, then manages to reverse, then up to the 1.18, 1.19, those recent sort of August highs, and we had a lot of noise around there in July, and then it's back up to probably the 1.2 area, because we've got two Fibonacci lines, that's 61.81 in there, overlapping with the trend one. So that could be another key up zone, and then really if it can get any further, it's back and trying to test those highs at 1.22. But currently at the moment it's looking pretty bearish. Now the question we've got to ask here is, can the euro bounce from this position? And technically speaking, it's looking more likely that it's going to head south than it is going to reverse and go back up. So we have to bear that in mind when giving an overall opinion, which in this instance I've gone for a bearish view. And if we focus in on the targets, we can actually see, it is looking better, or better looking trades to the downside, with 3.37, 4.62 to 1. There is some upside in there, but not a lot before it gets into a lot of noise. It's going to have to work hard to be bullish going forwards. Maybe some significant fundamental news or event might change that, but at the moment, overall, Euro USD looking pretty bearish. So there you go. The Euro US dollar does have a feel of the bearishness about it in the medium to longer term. In the short term, these currency pairs can jump on any news, events, economic goings on. So the world of FX is a tough world to trade in and predict the price action, but based purely on the technicals, looking pretty bearish. Please let me know in the comments below what you think about the price action. Is it going south? Is it going to bounce here and reverse? What's going to happen to the US dollar? Is that going to play a key significant role in where the euro heads next? Like I say, let me know in the comments below. And if you like the analysis, technical analysis today in the video, I'm going to put a link in the description below that you can follow if you want to learn more. And if you like today's video, please give us the thumbs up. Don't forget to hit the subscribe and bell buttons to receive further notification of content such as this I'm going to produce in the future. And all that is left for me to say now is thanks for watching, good luck with the trading, and I'll see you in the next video.